threat to the free flow of goods and services well before COVID-19 struck and closed borders in countries all over the world. Can global trade rebound from the pandemic's shock? As always, we've got a superstar lineup of speakers with us today. I'm joining you from New York City, and I'd like to welcome our global community of Bloomberg New Economy delegates who've attended the forum in Beijing and Singapore. We also welcome the thousands of viewers tuning in on social media and via the Bloomberg terminal. There will be opportunities throughout this conversation for real-time input from you, our audience. I encourage you to submit questions in the text box in the bottom right of your screen, and I'll invite you to vote in live polling at the top right of your screen. If at any point you should encounter technical difficulties, a simple refresh of your browser should help get things back on track. We'll start today's program with a conversation pre-recorded with the authors of a new book, Superpower Showdown: How the Battle Between Trump and Xi Threatens a New Cold War. It's written by Bob Davis, a Pulitzer Prize-winning senior editor at the Wall Street Journal's Washington Bureau, and award-winning senior WSJ China correspondent, Lingling Wei. Take a listen. Bob and Lingling, it's great to have you on the program.
Thank you.
You've both been living and breathing this U.S. China trade and economic war from the very beginning. Bob from Washington, D.C., Lingling from Beijing. So bring us up to speed. How would both of you score this showdown so far? Maybe Bob, you can address that from a U.S. perspective, and Lingling from a China perspective. Let's start with Bob.
Sure, and thanks. Great to be with you, Andy. Really, really appreciate it. So, it's opening day in the baseball season, and I look at it that way. I mean, we're like 3-3 in the bottom of the 17th. The pitchers are exhausted. Everybody wants to go home. I don't think there's a winner. It's just dragging on, and they kind of taken a break.
Sure. Also, thank you so much, Andy, for having us on. Really honored to be here. So on the surface, it does seem like China has scored some tactical wins. You know, the phase one trade agreement didn't really get into the matters that the leadership cares about the most. Industrial subsidies and SOE reform, none of it was in part of the agreement. And yes, China did agree to buy tons of American products, especially ag purchases. However, you know, as we know that they're not really meeting the targets now, and the stuff they're buying now is also what China needs at the moment, the soybeans and porks and chicken feed and all that. So, and also Beijing seems to be using this trade agreement as some additional leverage over the Trump administration. So the Trump administration wouldn't push too hard in matters like human rights and what's happening in Hong Kong. So on the surface, it does look like, you know, Beijing is gaining some kind of upper hand. However, really deep down, the cost of the trade war to China is super significant. And first of all, it has shattered investor confidence, you know, especially among private businesses. You know, we have seen for months growth in private business investment have been plunging. And yeah, the only thing that's propping up China's economy now is state sector investment. And another big casualty of this trade war to China is Chinese reform. Right now, there's no momentum to carry out all those needed changes to the Chinese economy. So longer term, I really think, if the reform momentum doesn't come back, it's really hard to see China will win in the long run.
Bob, a lot of people congratulate Trump on standing up to China, but fault him for his tactics. What should he have done differently?
Well, I mean, I agree with Lingling. You know, the reform effort in China is stalled. The U.S. isn't going to really get the purchases they expect. So you got to kind of look at it from the U.S. perspective. What did they get out of it? I mean, has China changed in any significant way? I wouldn't say it's changed at all. So what would be the alternative? The alternative clearly would have been to try to recruit allies, to work together, put pressure on China in a multilateral fashion. I mean, from day one, the Trump administration rejected that. They blew off the Trans-Pacific Partnership literally on the first day. And, at various times just made it clear they wanted to go one-on-one with China. Early on in April 2017, the French President Macron had come to the U.S. for a state dinner. He talked to Trump, said, we can work on this together. And Trump literally said to him, I got this one, and that's the way in which they have tried. So yes, they've gotten China's attention. They've certainly gotten the world's attention, but they haven't really gotten very much. And the alternative would have been to go the really hard slog route of, lining up allies and confronting them with a united kind of world, sort of a WTO alternative.
Lingling, you're one of the very, very few U.S. reporters to have penetrated the Chinese leadership top ranks in Zhongnanhai. First of all, I want to ask you, what do they really make of Donald Trump?
He was very confusing to the Chinese side, very unpredictable. They spent really a lot of time figuring him out. But on the other hand, in a sense, they also felt like they had him figured out. He's transactional, everything on the table. So give him big number, and he would accept it.
Briefly, who do they want to win the November election, Trump or Joe Biden?
I think, obviously there's some officials in China still think to this day Trump is a gift for China because he doesn't care about human rights and all those other issues. However, I do think there is a sense among at least some corners of the government, they're hoping for a new beginning because it's making things really hard for them. Mm-hmm. As evidenced by the recent very sudden decision to close the Chinese consulate in Houston. So, and they look at Biden as someone that they might be able to talk to. Because Biden, as Bob mentioned earlier, he might choose to go back to those multilateral organizations and, choose to work with different nations, including China, on issues like climate change, trade and all the other issues. You know how Chinese love dialogue. They're good at conducting dialogues. So in that sense, they're hoping, some of them, I can't speak for what President Xi Jinping wants. If I knew, I would have run a story about that, but I didn't. Right. But it's a little bit divided. It's hard really to see for sure.
Staying with China for now, some people watching the glacial pace of economic reform in China, which you've just referenced, have come to the conclusion that changing Chinese trade practices is basically mission impossible. I mean, if Xi Jinping truly believes that the state-led economic model that he is building and reinforcing is essential to the continued survival of the Chinese Communist Party, what could possibly persuade him to change course?
That's a great question. For years, as you well know, Andy, foreign pressure was good for reforms in China. Back during the WTO era, right? Zhu Rongji, he's a huge proponent for reforms, used that WTO negotiation to get China to do some very painful reforms, especially involving the SOE era. Right now, under Xi Jinping, that kind of, that's no longer the case. Foreign pressure is actually bad for reform because this narrative of the U.S. trying to keep China down, it's really taking hold, not just in official circles, but also among the Chinese public.
Lingling has taken us inside Zhongnanhai, the Chinese leadership compound. Take us inside the White House. So you've got Treasury Secretary Steve Mnuchin on the one side, and he's pushing for a deal. Wall Street really wants a deal. You've got the hawkish Peter Navarro on the other side, who'd like probably to see all of American companies pull out of China and bring jobs back to America. And in the process, he would hope, I imagine, sort of bring the Chinese economy to its knees. And then you've got a president who's sort of swinging between these two poles. How did all this play out in the negotiations?
Well, I mean, in our book, what we talk about is a Wall Street Trump and a blue collar Trump. And there are both, he is legitimately both of them. On the one hand, his rants during the campaign about China ripping us off, ripping off the U.S., stealing jobs and all that sort of thing, he does genuinely believe that. On the other hand, he looks obsessively to the markets, right? And he ping-pongs between both of them. I mean, you see that playing out in his aides also, as you laid out. There are people in that White House who believe that China is the greatest threat to the United States since the rise of fascism in the 1930s. He is not one of them. There are people in that White House who think, China's a problem. Certainly it's a problem, but, there's a lot of problems in the global economy. And, let's not let this get out of hand. And he's not one of them either. So he goes from poll to poll, and the different advisors play off of that. And so at some points you see the sort of blue-collarish, the Navarro and Lighthizer wing kind of win out. At other times, he pulls back when the markets react. The clearest signal for watching somebody is unpredictable as Trump is, what are the markets doing? If the markets react, you can count within a week he'll back off on whatever it is. I think you can see this now on closing consulates, this speech, that speech against China. If the markets move, then it'll tamper down. If they don't, you'll see more.
Bob, we're rapidly running out of time here. I just want to ask a couple more questions. I know you've done you did a lot of reporting on the impact of Chinese exports on U.S. manufacturing communities, the so-called China shock, right? It resulted in several million lost jobs in places like Pennsylvania, Michigan, North Carolina, and helped propel Donald Trump to victory in the last election. What's happened to those communities since then? Will they vote for him again?
Well, a lot of those communities have been they're factory towns we're talking about basically in the Southeast and the Midwest. And factory towns have not done particularly well under Trump. Even before COVID, manufacturing employment's down, the tariffs hit. They might protect some companies, but there are many more companies that use products than produce products. So, they were not beneficiaries of this trade pact or this trade fight, and neither were the farmers. On the other hand, there are many, many, many other reasons, workers and farmers are, supportive of Trump. I don't think he's lost, I'm doing a story now on factory towns. I don't notice any, shrinking away. It's all the sort of other kind of people, right? The suburban housewives, the sort of classics that you hear about that where you see the shrinkage. But his base is still pretty damn strong.
Okay, quick one for both of you. This showdown is obviously about much more than trade. We've gone from a trade war to a tech war to a talent war to a financial war. And now business leaders like Ray Dalio or Bridgewater are warning about a shooting war. What is the sequel to Superpower Showdown? Where is this story going? Briefly, from each of you.
Well, I mean, a shooting war is like, end of the world scenario. So no, I don't think we're going there. We never got into a shooting war with the Soviet Union. I don't see why in the world we would possibly get, to that extent. I mean, I think we are probably at this point in a Cold War, right? I mean, it's a different sort of Cold War, but I think we're in it. I think one thing that's really hard to tell, I mean, we're also in the silly season, right? I mean, we got 3 months to an election. So, I mean, all the sort of tough, steps that Trump is taking. If he wins a second term, does he really continue to that level? And if Biden, defeats him, I think the long-term trend is toward disengagement. But clearly, the tone will change enormously.
Last word to you, Lingling.
Sure. It's kind of ironic in a way, right? So trade was the area where the relationship started to crumble, and now trade is one of the few remaining channels where both sides still talking to each other. So right now, this relationship really is hanging by a very, very thin thread, and by many other measures, we're already in a new Cold War. I would just hope that, Chinese officials often say that the ball is in the U.S. court in terms of, the future of the U.S. China relationship. I would say it's in China's court as well. Let's hope President Xi Jinping still means it when he says there are 1,000 reasons to have a good U.S. China relationship, not one single reason to spoil it. Let's hope he still believes that.
Bob Davis, Lingling Wei, Superpower Showdown. Great book. Thanks for being with us today.
Thank you
so much.
Our thanks to Bob Davis and Lingling Wei for taking the time to join us. Now it's my pleasure to introduce our three guests for today's panel discussion to give us their thoughts. Ambassador Charlene Barshefsky is the Senior International Partner at WilmerHale in Washington, D.C., chairing the firm's International Trade, Investment, and Market Access Group. Ambassador Barshefsky served as the United States Trade Representative from 1997 to 2001, and in that role negotiated China's entry into the World Trade Organization. Charlene, thank you for joining us.
Great pleasure to be here, Andy. Thank you.
Peter Mandelson is co-founder and chairman of Global Counsel, a regulatory, political risk, and public policy advisory business with offices in London, Brussels, Washington, and Singapore. Lord Mandelson is a former European Trade Commissioner and British First Secretary of State. Welcome to the program, Peter.
Very nice to be with you, Andy. Thanks.
Finally, Austin Ramirez is president and CEO of Husco International, a privately held engineering and manufacturing company. He also serves as a director of the National Association of Manufacturers, the Association of Equipment Manufacturers, and Old National Bancorp. Thank you for being here today, Austin.
Thanks, Andy. It's great to be here.
Okay, picking up on where we left off with Bob and Lingling. Charlene, in a recent article in Foreign Affairs magazine, your successor as the U.S. Trade Representative in the Trump administration, Robert Lighthizer, writes, and I quote, "No trade policy decision since the end of World War II proved more devastating to working people than the extension of permanent normal trade relations to China in 2000. Of course, that was the deal that you pushed through. Lighthizer says that Trump's trade policy is all about restoring manufacturing jobs, including those lost to China under arrangements that you put in place. Would you agree that the way things have turned out, American workers have indeed suffered grievously, and that trade policy needs to change to support them?"
Well, first of all, let's look at the Trump trade policy record. If we look at the studies put out by the Federal Reserve, as well as Moody's and other rating organizations, here's what they say: that the Trump trade war with China has not boosted U.S. manufacturing or employment or output, but has raised producer prices and consumer costs. The estimated job loss from the trade war in the U.S. is 300,000. And it's estimated that the trade war, because it costs consumers, it's producers and consumers in the U.S. that pay for the tariffs, not China. Those consumers have paid dearly for the trade war. The average American family is $800 poorer a year, and that wipes out the benefit of tax breaks that they had earlier received. So if the purpose of the Trump trade war and trade policy is to restore jobs and manufacturing in the U.S., it has done exactly.
I think we're losing, Charlene, I think we're losing you right now. Why don't we switch for a moment to Austin, and then we'll come back to you, and you can complete your thought. Austin, your company, Husco International, makes parts for companies like Ford, General Motors, John Deere, Caterpillar. Duties on those parts shot up at the start of the U.S. China trade war. What has been the effect on your business and the workers that you employ in the United States and indeed all over the world?
Yeah, sure. The short answer is it's been expensive. We source a lot of components from China for all of our global factories. And as you mentioned, the consumption in the US, we were hit by 25% tariffs on most of those parts. So we've had to adapt. We've pushed some of the cost increase down in our supply base. We've moved some parts around. We pushed some onto our customers. And we've adapted to the new reality. I think that the bigger danger is in the long term. These tariffs make us less competitive, especially vis-a-vis our competitors in Japan and Germany that are manufacturing with components from China and not having to pay these tariffs. So in the short term, we've adapted. It's certainly decreased our profitability. We've had to raise our prices. And in the long term, I worry about its competitive impact. One thing I want to respond to from an earlier point, though, is this narrative that manufacturing in the U.S. has somehow been decimated over the last 20 years. And the reality is that since 2000, manufacturing output in the U.S. has increased steadily. We're making more stuff now than we ever have. And admittedly, we're doing it with less people. But that's because technology has developed and productivity has gone up, not because those jobs have been stolen by China. So I just think that narrative that manufacturing has somehow been wiped out in the U.S. is a false one.
And the impact of the trade war on jobs? Are you laying off staff in the United States? I mean, what's been the impact on the labor force?
Yeah, on the margin, it's hurt. We've had to move some things around. We have components that we used to build in the U.S. for customers that we ship it to Brazil, is a good example, that we can no longer afford to make those in the U.S. because of the tariffs. So we've had to shift some work to our plant in India or the UK or other markets. But the impact on employment hasn't been severe in the short term. In the long term, I worry that it damages our competitiveness.
So you have manufacturing facilities in China, and I want to ask you this. Just the other day, the U.S. Attorney General William Barr called out U.S. companies for what he said was corporate appeasement of China. How are CEOs with businesses in China like yours reacting to those kinds of threats and warnings?
Well, I mean, we react to policy, not rhetoric, first of all, and I think we're not alone in that. One thing I note is that China is important to us as a supply base, but it's also very important to us as a market. It's the largest market in the world for construction equipment and for automobiles. And the Chinese consumption pulled Husco out of the financial crisis in 2008 and 9, and it's pulling us out of the COVID pandemic right now. They're really the only market in the world that has robust levels of consumption for cars and construction equipment. So, I think it's one-sided and myopic just to think about the supply impact of China. We have to think about them holistically, which includes as a consumer of American products.
Charlene, we'll get back to you, but let me just turn to Peter for a moment. Peter, in the long run, which way do you think Europe will go? Which side do you think Europe will take in this superpower showdown? Will it join with America in taking on China? Will it go with China? Will it hedge?
Europe is certainly not going to go with China, but nor is it going to accept this binary choice that we're being presented with by the US administration at the moment. American policy, without doubt, in any sort of tariff war, can inflict damage, harm on an adversary. US policy of this kind can slow down China. It can increase the costs and the risks for China in the global economy. But I think the European evaluation is that that approach is not going to defeat China. And therefore, we're better off managing China's arrival on the global scene, that it's better to integrate China to the international system. And that really will be, in my view, the continuing thrust of European policy.
Right now, it seems that Europe is losing patience with China too. The trade talks seem to be going nowhere. Governments around Europe are starting to screen out Chinese inbound investment, particularly in high technology. Market access for Europeans is the big issue. If the job is, as you put it, integrating China more with the global economy, how do you go about it? What's a smarter approach?
Well, there's a lot of European tension about China. Don't get me wrong. I would say that Europe, in many respects, is sort of bristling with irritation about many aspects of what has become an asymmetrical relationship between China and Europe. There's irritation that in Europe we're much more open to China than China is open to us. Yes, they've reduced or eliminated tariffs on the border, but behind the border, they persist with regulatory, licensing, and other restrictions that we don't operate in Europe. There's a lot of anger about IP protection and IP theft, and there's a lot of disquiet about the super industrial policy machine and the subsidies that China operates, and which distort international competition between Chinese companies and foreign ones. So there's a lot to fall out about between Europe and China. And remember, when I was trade commissioner in Europe, I described China as a juggernaut out of control in the international trading system. And so we will continue to press China very, very hard indeed for a rebalancing. We don't, by the way, like either China's bullying behavior and activities towards countries that criticize Chinese policies and activities. We don't like any of that. And so we'll continue to operate pressure on China, but we are going to resist what is a binary choice, or an attempt to foist a binary choice on us, or the United States. It's a false choice. It's not one that we're going to make. We need to be present in both these big markets, even though in security terms, political terms, democratic terms, in almost every other respect, of course, we are aligned in Europe with the United States. But we're not going to make that binary trade and economic choice in the way that the present American administration would like us to do.
Has actually made a choice, but it certainly seems to be leaning very heavily now towards the United States. Its decision to ban Huawei from its 5G networks was a watershed. It seems to have erased this golden era of relations with China, the narrative pushed by the former Cameron government. How do you think China will respond? Long term, can a Britain newly separated from its largest market in Europe afford to alienate the world's largest economy, the second largest economy?
Well, I don't think so. I mean, I don't quite know where we're going to get our trade from and where we're going to make our living. We have cancelled and severed our privileged trading relationship with Europe. We already have a very, very substantial trade and investment relationship with the United States, but the United States is also a fairly well protected economy and market as well. Where else are we going to go if we're also going to cut ourselves off from China? And by the way, the United Kingdom government did not want to make the decision it did over Huawei. It did so very reluctantly. It felt it was left with absolutely no alternative because of the strength and ferocity of American sanctions. The United States was also very effectively burrowing away into the ranks of conservative MPs who were undermining the government's position on Huawei. No, it was not. This was not a change of policy that was embraced at all enthusiastically by the Prime Minister or the government. But in the end, it was felt that a sort of mixture of American force majeure and dissent within the ruling Conservative Party left the government with no alternative.
Charlene, we'll loop back to you for your final thoughts on this on U.S. China, and then we'll get to our first polling question. So, Charlene, please.
And that is that about 80% of U.S. job loss is because of technology and productivity increases brought about by things such as automation, robotics, and so on, with the result that we produce much more today than we ever have before, but with far fewer people. And this is a significant challenge for the U.S. Economy. In terms of what to do about the challenge, of course, we have the compounding feature of COVID, particularly what is believed to be its current and will be its future impact on small and medium-sized businesses, which are substantial employers, not just in the United States, but around the world. As you know, SMEs really prop up most economies in the world, and this is also where you get so many of your entrepreneurs from. So this is an enormous challenge for the US, for Europe, for countries around the world, and particularly hard hit, of course, are developing countries, which don't have the same monetary and fiscal space that the US, Europe, and other wealthy countries have to stabilize the economy. So job one is to stabilize the economy, which is really what these accommodative measures have done. I think step two is to redirect some of this financing, some of this stimulus, if you will, stability money into public goods, particularly public health, but other areas of public goods, such as education, which have substantial long-term benefits. I think we have to look further at retraining, reskilling in a serious way. But in the meantime, proposals for income insurance or a national minimum income, I think, have to be looked at very, very seriously. People shouldn't have to choose between food and rent or food and medicine. That's simply an unacceptable situation for the polity as a whole. And then I think the U.S. needs to decide what direction it's going in. Where is this country going? What's the plan? What's the vision for the United States 5 years, 10 years, 20 years from now? And build the kind of workforce and resiliency that we are going to have to reach that goal. But when you don't have a goal, when you have no vision for the country, and we are simply adrift, particularly in the face of China, which has very well-defined goals and priorities, then we are not destined to fix a number of problems, and most especially the employment problem in the United States.
Thanks, Charlene. Let's move now to our first polling question, if we've got that ready. First, a question for our audience: How do you think existing trade agreements impact workers where you live? Three options. Generally, existing trade agreements are harmful to workers. They are helpful to workers. They have no impact on workers where I live. Those are the three options. And while we're waiting for the audience to submit their answers, let me go to our first audience question. This one comes from Finbar Birmingham, and he's an editor at the South China Morning Post in Hong Kong. He asks, how far do you think decoupling will go, and which areas of it worries you the most? I don't know, Peter, do you want to have a go at that one? Decoupling. How far is it going to go?
I can't tell how far it's going to go. I'm sure that if Mr. Trump is re-elected as president in November, he will try to pursue it as far and fast as he possibly can. I don't believe that should Mr. Biden be elected, he will pursue that policy with the same intensity. That's not to say that he's going to drop the China ball. I don't think he is. I think that there's a fairly settled view that, having caught the attention of Chinese leaders, the United States has to continue to press home its demands, its pressure for economic reform and change in China's openness and its trade policies and behavior. But if you ask me where I'm most worried, it is essentially in the field of international standards. I think the internationalization of standards has been a huge benefit and boost to global growth and prosperity. I mean, you just have to look at the way in which containers, for example, comply with international standards. to see what a huge contribution that has made. Now, if you look now at in the area of telecommunications and information sharing and transfer, again, the internationalization of standards or the convergence of standards there has brought huge benefits to consumers and to business efficiency. If we were now to start breaking up and sort of nationalizing those standards and creating barriers and obstacles in the free flow of data and information, then that's not only going to undermine, in my view, consumer interests and reduce business efficiency. I think it's going to make it much harder, for example, to tackle cyber crime and fraud and infringements of privacy, where the ability of those standards and regulators to cross borders has enabled them to look, quite penetratingly into the activities of wrongdoers and to take action across borders. If all that's now going to be broken up as well, we will not only be undermining ourselves economically and our prosperity and the welfare of consumers, but we'll also be offering a gift to cyber criminals.
Okay, on the question of trade agreements and their impact on workers, our audience seems to be pretty much split. 45% think trade deals are helpful, and 35% think that they are harmful. I want to bring in another audience question. This one is from Robert Wall, and he is a partner at Mayer Browne, LLP, in Hong Kong. Robert asks, 20 years after WTO accession, why were there no repercussions for China remaining essentially a closed economy with massive state-owned enterprises dominating economic activity, capital controls, a non-convertible renminbi, and foreign investment restrictions in every sector? Charlene, what are your thoughts?
I think there's been a massive failure of enforcement by the George W. Bush administration, by the Obama administration, and by the Trump administration. China's WTO deal contained a number of China-specific enforcement measures, just specially crafted for China, the most powerful of which was virtually never used by the administrations I've just mentioned, was to bar Chinese imports into the US that caused market disruption. Market disruption is a very, very low legal standard, as your questioner will note. This provision, which was in effect for 12 years, during the time of China's greatest disruptive impact, if you will, on the global economy, was used only once in 12 years by the Obama administration, to its credit, on tires. Where was everyone else while this provision could have prevented what was the disruptive impacts that were later registered? Second provision, never used by any of the administrations, including, oddly, the Trump administration, was a provision that prohibited forced technology transfer. The trade agreement just negotiated and the trade war just embarked upon has basically re-encapsulated that same prohibition. It's been there since 1999, and yet no administration has used it. The end of the Bush administration and during the Obama administration, we had a variety of dialogues with China, and I'm all in favor of dialogue, period. But to have dialogues on fundamental trade issues when conditions on the ground in China are getting more and more challenging for companies, for foreign companies, clearly should have demonstrated that something else needed to be done. Very little else was done. So I think there's been a massive failure of enforcement, the result of which China has felt little consequence for its policies. Last point I would make, to me, one of the key answers to this problem was TPP, because if you're going to have a trading system and you're going to have a substantial non-market actor in that system, you better be sure you have the rules to deal with it. You won't get those rules with the non-market actor in the system, so you recreate the system. You set up the rules of the road in a new economy in which we're all operating, going. TPP would have done that. TPP would have attracted other member nations. When the Trump administration on day one threw TPP into the trash can, it relegated policy to the trash can.
Question briefly, Charlene. WTO, should you preserve it? Can it be reformed? Should you dump it? What's the answer?
I think this is a very difficult time for the WTO. Of course, the U.S. position now is that a new leader of the WTO can't have a whiff of anti-Americanism, has to agree that WTO needs fundamental reform, and that China cannot be handled in the current system. I think it's unlikely any candidate will agree to that. But I think what the WTO has become a forum for talking, and to the extent problems are identified, they're resolved elsewhere in bilateral free trade agreements, in regional free trade agreements, and so on. But we have to see that it isn't just Trump that has created this problem. The WTO has been almost moribund for 20 years.
Peter, you wanted at one point to be that leader. You threw your hat into the ring to run the WTO. Why? What made you think that this organization could be reformed?
Right, I threw my hat in the ring because I'm a believer in trade as the principal conveyor belt of growth and prosperity in the world, that it needs to operate within a rules-based system where there is both mutual interest and mutual agreement. But I also believe that the WTO rulebook needs updating. I think that in too many areas, WTO rules were designed for a period or on an assumption that it was essentially rules that were being applied to Western-style market-based economies, or economies that were evolving into that or on their way to becoming such. Well, we've seen that not just in China, but in many countries, that isn't the case. And therefore, we need new rules that apply, tough, clear disciplines to the more state-backed economies as well as the market-based economies in the world. But to get any sort of revision of the WTO's rulebook, you need a new political will and sense amongst its leading members that it does have an essential role, that it is still relevant, and that its existing structures can be used more effectively. And that means the United States, Europe, China, Brazil, India, Australia, and others, Japan, Canada, they've really got to come together as a coalition of the willing to show leadership to make the WTO effective once again. Now, I know everyone will say, well, you're just sort of shouting into the wind there with the present American administration. I accept that, but it's not going to remain as it is forever. And therefore, I hope that the United States, under a different president, will work closely in such a coalition with its allies to bring change. I would just add one postscript to what Charlene said about enforcement of rules. I couldn't agree with her more. Whilst I think some rules need to be updated and revised, others need to be enforced. When I was Trade Commissioner, I instituted proceedings within the European Union to take action and to adopt countervailing duties against Chinese industrial subsidies. I had two problems. One was in defining the subsidy and just getting at that subsidy within the rules of the WTO, but also I found that there were very many European producers and manufacturers located in China who frankly were benefiting from those subsidies and didn't actually want me to attack them at the end of the day. So what we do have to see this in the round here. That's why I say it's not black and white. There's not a binary, right and wrong for China or against China. There are so many Western interests present in China that are being pursued very actively and to the benefit of those interests and companies and their employees and investors. Let's remember that. But nonetheless, alongside that, we do need a recalibration. We do need a rebalancing of the relationship between China and the rest of the world. And I believe we have to pursue that very vigorously.
Let's before we get to Austin, I want to get your take on the WTO and so on. But before we do that, let's move to let's hear what the audience thinks about the WTO and move to our second polling question. What action should be taken regarding the WTO? None. Continue with the status quo. It should be reformed. It should be scrapped. It should be abolished. Those are the three answers. Austin, businesses want predictability more than anything. When it comes to trade, the future has never seemed more uncertain. Ideally, what global trading architecture would you, as a business leader, like to see?
Well, I think an effective WTO would be the foundation of that. Whether that's possible or not is a separate question. But as you said, we're looking for stability. We're looking for low trade barriers, whether they're tariffs or other non-tariff barriers. And I think it's really hard to achieve that in a unilateral or bilateral trade agreement world.
Fully in agreement with that sentiment, Austin. 93% think it should be reformed. Only 5% want to dump the WTO. Okay, quickly, an audience question here. This one comes from Tom Weiler, a Senior Vice President for Global Strategy at PSB Capital Partners in Chicago. Tom says, trade enforcement has become such a political hot potato. How do we reform our approach to enforcement such that it is not politicized, but moves faster with greater accountability? Charlene, very briefly, because we've got a lot to get through. We want to get to questions about the future of globalization and hear from Austin.
Sure. I think that the dispute settlement function in the WTO, which is a hallmark of the WTO and should be preserved at all costs, needs to be reformed. Proceedings take way too long. The outcome is uncertain. The offending party can keep on offending until the proceeding ends, which could be years and years after it was brought. These things have to change. And frankly, the U.S. has to have a bit of a thicker skin. You don't win every case you bring. You don't win every case you go to court with. And, you win some and you lose some. For the U.S., losing anything seems to be unacceptable. And I think, frankly, that's not a position that can stand scrutiny.
Okay, globalization. Let's talk about that and COVID-19 and the impact that it's likely to have on global trade. Austin, starting with you, in the West, there's a widespread view that globalization has overshot. Global supply chains are now optimized for efficiency, and they need to be retooled to make them more resilient to shocks like this pandemic. In fact, we have a chart, if we could bring that up, that shows how much trade with China fell year over year with the rest of the world in January, February of 2020. A dramatic fall off in trade. Austin, how is your business responding to this crisis? Are you reworking your supply chains?
Andy, this is going to sound really counterintuitive, but my lesson of the last 3.5 years, and that's inclusive of both the trade disputes as well as the COVID pandemic, is that a global supply chain is a resilient supply chain. And I think the key lesson, though, is you can't over-index into any single market. And there has been a problem over the last several decades of over-indexing in China for a lot of U.S. manufacturers. So right now we are retooling our supply chain, but it's not necessarily coming back to the U.S. or even to NAFTA. It's going to other parts of the world where we can still have cost-effective supply chains, but it's much more diversified. And we often have dual suppliers for single components or component categories so that we can shift our supply base in response to changes in currency rates or tariffs or global pandemics or anything else. So again, I think the lesson for Husco is that we need to be more global in our supply chain, not less.
So we're getting a lot of questions coming in for you, Austin. Here's one from Jenny Guan, who's the CIO of Quantscape Asset Management in San Francisco. She asks, could new technologies such as 3D printing move production closer to end users and help to shorten the whole production chain?
Yeah, absolutely. I mean, 3D printing is a really interesting case study. Right now, it's primarily used for prototypes and short-run production. Over time, as that technology develops, it could upend entire supply chains. And I think this analogy between technology disruption and trade disruption is a really interesting one, because technology has the potential to upend, not only the manufacturing sector, but huge portions of the service sector as well, and cause massive job disruption. And I think we're paying a lot less attention in terms of our policy tool set to how we address this issue of job disruption from technology as we are job disruption from trade.
Another one for you, Austin. This one from Mary Little from Parawan, Utah, and asks, how can businesses best strike an interim balance between nearshoring and reshoring vis-a-vis global trade?
Yeah, it's a good question. I think supply chain changes happen slowly. It takes time. It can take 2 or 3 years for us to develop a new supplier for our components. So I think we're slowly seeing, as I said earlier, a migration out of China. I think that's real. And some of it will come back to the U.S. or to NAFTA, but I think a lot of it will go to other parts of the world as well. Southeast Asia is one region in particular where we're seeing a lot of our supply chain migrate. And some of those are Chinese companies that are making new manufacturing facilities outside of China to serve their global customers.
Quick one more, and then we'll move to Charlene. This one from Paresh Patel, who's the founder of E2 Equitable Energy in Katy, Texas, and he asks, it's a question about digitization. Will we see greater adoption and acceleration of digitalization of international trade transactions? And he has in mind things like blockchain and smart contracts.
Absolutely. If there's one thing that this COVID crisis has done, it's accelerate the trend to digital everything. If you would have asked me 6 months ago whether this business could operate with the vast majority of our staff working out of their homes and not coming into the office, I would have laughed at you. And now we've proven that that's possible. And I think that will have enduring effects on all sorts of different aspects to the business supply chain and model, where we'll shift to more effective, lower cost digital platforms.
Charlene, I want to ask you a question about structural changes that are coming in the wake of COVID-19. It seems that much of the industrialized world is coming out of this pandemic looking more like China. Governments are bulking up national champions, they're protecting local jobs, subsidizing industries. Is this a temporary response to the crisis, or are we really seeing a more permanent structural change?
I think the jury is still out. Of course, most countries, major countries, initial efforts with respect to monetary and fiscal policy has been to stabilize the economies, not to pick winners and losers. Some of those funds will be redirected to public goods. The healthcare systems in many countries obviously need an overhaul. This is quite clear, but other areas as well of public goods. A country like China had already reverted to a heavily statist model, particularly in the last 10 years, as it diverged more and more and more from global market economics and into state-led, very aggressive and well-funded industrial policy. For China, that's a change which I believe is now embedded. It's hardwired in China and is not likely to change. Other countries, in response to that, frankly, more than to COVID, may themselves embark on bits and pieces of industrial policy and a kind of determinism. But we know that industrial policy is very costly. Just look at Japan in the 80s, very costly and usually fails. Governments are terrible pickers of winners and losers. So I think we will end up at some steady state at some point, not yet. And there'll be some elements of industrial policy, but hopefully not too much and not permanent.
Peter, we're running out of time, but I want to get this question. It is an interesting one from Gary Blumenthal, who's the president of World Perspectives in Arlington, Virginia, and asks, S&DT implies protectionism is better for development. How can developing countries be persuaded that opening their markets is best for development?
Through practice and demonstration of the reality of this. Of course, there is a role for import substitution or temporary protection or whatever. But over time, in the long run, all you're doing is slowing the growth of your economy. You're slowing the rate at which prosperity and living standards rise for your people. Trade really is the driver of global growth and prosperity. And while, of course, we can all make the argument, and I do every week, that globalization can be improved in so many different ways, that should not lead us to the conclusion that we're better off without it. We're not. Globalization, the global interlocking of different economies, creates opportunities for developed and developing countries alike. Of course, there are winners and losers, but in aggregate terms, our net rise in growth and prosperity and living standards is a fact, and it has been driven for over 3 decades now by the operation of globalization, and we certainly shouldn't be turning our backs on it now.
Austin, last word to you on this. You operate in many parts of the developing world. Are you planning to invest more or less? How do you look at the developing countries now as an opportunity?
Yeah, as I mentioned, I think we're casting a wider net for our supply base. I think a more global supply chain that allows you flexibility to pivot as conditions change around the world is more robust and more resilient. And hopefully we get past these tariffs that have they've damaged China, they've damaged the U.S., and unfortunately they haven't accomplished any of the policy aims that they set out. So I really hope we get back to a more normalized trend towards free trade with everyone around the globe.
We're going to have to leave it there, I'm afraid. We've run out of time. Charlene Barshefsky, Peter Mandelson, Austin Ramirez, thank you again for joining us today. We're grateful for your participation and for your perspectives. I'd also like to extend my thanks to Bob Davis, Lingling Wei, for taking the time to join our conversation, and to our audience, both within and beyond the Bloomberg New Economy community. Thanks for joining us. We're back in 2 weeks. We invite you to join us for our conversation next month on resurrecting the consumer economy after COVID-19. That's on Tuesday, August 11th. Follow the conversation with @NewEconForum on Twitter, or like us on Facebook. And to learn more about other upcoming events, please visit our website at neweconomyforum.org.